to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance and trends in the Nasdaq Volatility Index, or what we call Vol-Q. But Shawn, I'd like to kick it off with the US dollar. Really has had quite the move just in the past few minutes here, and we're seeing that reflective in the downturn in stocks as well.
Yeah, and I think this really sort of confirms, if you're trying to figure out really what sparked the major selling today. We were a little soft coming into the open, but I think what really sparked the major selling was when we started to hear from Fed Chair Powell as he was testifying in Congress. And that was really where he acknowledged the things that maybe inflation isn't going to be as transitory as they initially had suspected. It might linger a little bit longer. And then also talked about having to maybe accelerate the pace of cutting asset purchases. And I think that is why you saw the markets get a little bit concerned that if they start to tighten policy too fast, is that really going to maybe start to hurt the economy and have a major impact on the growth trajectory we're on? And if you're trying to see where, to me, it was confirmed that this was really more of a tightening Fed, and that also probably brings forward maybe the calculus on when we're going to get some interest rate liftoff. Looking at the chart of the dollar, pretty much skyrocketed almost as soon as we started hearing from Chair Powell. And I think that is really what's behind a lot of the major selling, is this fear that the Fed is going to have to tighten policy a lot faster than what I think was initially expected.
Right, Shawn, it's so interesting too, because clearly there was no expectation of getting the new variant headlines into the market that we saw on Friday, which of course was a shortened session and typically lighter volume. Then you kind of have the taper conversation happening for real now. It makes you wonder if we would have seen that kind of downside action without the new variant headlines on Friday, if the market really was just focused on tapering and the interest rate conversation. So it's really interesting to see that variable thrown in there. So with that said, Shawn, let's take a look at the Nasdaq-100. We can even throw in the stocks there as well. And did you see any clues from Vol-Q that could have led to the action that we're seeing now?
Yeah, and I think one thing that I thought was interesting was Vol-Q. It did start to climb. We started to see a little bit of some movement higher across the volatility complex, and it really didn't matter which measure of forward-looking volatility you were looking at. You started to see a little bit of a climb as we went into the holiday, and that really got sparked higher when I believe it was sometime later on the evening, Thursday on Thanksgiving Day, where the Omicron variant really started to take hold of the media, started to get a lot more attention, and that was where you saw a lot of selling going on Friday. That was a function of two things. This was, the headlines were pretty scary coming out about this to begin with, but you're also doing that on a day where a lot of traders are away from the desk. There just wasn't the liquidity to handle that. So seeing the Vol-Q start to move higher going into that was a little bit of a warning that the market was sort of getting a little bit more cautious. And when the market is in this environment where they're growing more cautious, you're seeing these measures of forward-looking volatility climbing. It doesn't really take much to spark a sell-off, and I think we've got two big things that can really scare the market: an aggressive Fed when it comes to tightening, and also the prospect of another wave of a variant that could have some pretty big implications for the global economy. So, seeing where we're at on these indices, though, if you look at the semiconductor, the SOX index, it's still up there around some of those highs that we've seen. It is off slightly, but we haven't seen it come crashing down and really breaking through a lot of price levels. It's still lingering around that 20-day moving average. The one thing I'm looking at is the Nasdaq-100, which in the past 20 minutes or so, you've seen a little bit of an acceleration, some of the selling pressure there, but seeing it try and make its way back up to that 20-day moving average, which for me now, I'm just looking at the 16,200 price level, seeing a recovery back up towards those levels, to me would indicate that maybe you are seeing some buyers coming in and that we could get a little bit of a stabilizing bid in this market.
Right. I mean, Shawn, when you think about it, the Nasdaq's only 4% off of its all-time highs. And, everyone was saying for quite a while here, it's so overvalued. They were looking for a specific event to shave some of those points off the valuation there. But when we go back to the Fed here, inflation and tapering isn't anything like it's new news. I just sometimes I wonder if these moves are pretty extreme when I feel like the Fed has been crystal clear about what they've been telegraphing. It's almost like the market is looking for something to hinge itself on because people are concerned about the valuations that we're at right now.
I think so. And I think if you look across the major indices, we've had some pretty incredible runs, well into the double digit in terms of returns for the year. I think if we're not sitting on the kind of returns that we've had this year, maybe you don't have people as quick to just go ahead and take those profits and maybe pull some cash onto the sidelines. I think the really interesting thing that I was noticing was there were a lot of economists and a lot of analysts coming out and saying they expect the Fed to hike rates for the first time, and it's an actual rate hike, not cutting asset purchases, somewhere around in the middle of 2022, which would be a pretty aggressive timeline if you thought they were going to have a nice, even gradual reduction of asset purchases that would probably end sometime in the spring. The last time they did a rate hike, they actually gave about a year from the time they were able to wind down asset purchases to where they wanted them to be to when they made that first rate hike. So I think there were some analysts and some economists out there who maybe expected the Fed to have to get a little bit more aggressive. But I think what this is telling me is the market, by and large, got caught off sides here a little bit. But I think this selling does to me look like it's a little bit overdone, just breaking through some levels. This is maybe a selling begets more selling, but I do expect at some point to see this as an opportunity for some people to come in and maybe purchase some of those names that they had missed out on. And I think it's also worth pointing out, for whatever reason, the safe haven today for the entire market looks like it's Apple. If you look at a heat map of the Nasdaq-100, it's the one big green spot that you're going to see in there. It's got a large weighting in a lot of these major indices, but seeing that Apple's able to hold in there, I think that's one thing that's interesting. But seeing if this is maybe an opportunity for more people to come in and start buying some of these names on these pullbacks, that's what I'm going to be looking to see over the next couple of days.
All right, Shawn, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.